Hello friends. Friends, we'll continue with dissolution of partnership firm. Right? In dissolution, we have covered the major topics. In the very beginning, I told you we'll be covering 4 things in this. One is realization account. Right? In this, we sell all our assets subject to conditions, and from the money that we realize, we settle the liabilities. Clear? Then, second thing was partners loan. Clear? Third thing, partners capital accounts. And the last was bank or cash account. Clear? So we have discussed all the major topics of this chapter. We are left with just 2 small topics, right? Those are very small discussions related to this only. Clear? Those 2 discussions are related to this only. The basic is this. The whole chapter is revolving around these 4 topics: realization, partners loan, partners capital, and bank or cash account. One topic that I will touch upon maybe in the next lecture is memorandum balance sheet. That is a very, very small topic, a very small concept, right? The basic concept of this chapter revolves around these 4 things. Clear? We have discussed all these 4 things in detail, right? If you have understood the detail of all these 4 things, then doing the practical questions will be very, very easy for you people, right? You must understand the concept in detail that we have discussed in the previous lectures. So if you are seeing this lecture, I hope that you have understood what we have done so far. You have gone through the previous videos, right? After that, you can attempt what we are going to do today, right? So today we'll do the practical part of it. I'll be doing a practical question in which we will prepare realization account, partners capital account, and bank account. We will cover all these areas. Clear? So let us see the problem. Balance sheet of a firm as at 31st March 2016 is given to us. We have the liabilities, we have asset sides, freehold property, investment, debtor, stock, cash at bank. On the liability side, what we have is X capital, Y capital, Z capital, sundry creditors, and profit and loss account. Clear? Now, first of all, we have to prepare realization account. What is the first step of realization account? Transfer all the assets, right? Transfer all the assets to realization account subject to conditions, right? So we will transfer all the assets. We will not see what is further given in the question. First of all, we will prepare realization account. Clear, friends? So first of all, what we are going to do is we are going to prepare realization account. For this, we will transfer the assets first. Let's start transferring. We will transfer freehold property. Yes. We will transfer investments. Yes. We will transfer sundry assets. Yes. We will transfer stock 1,50,000. Yes. We will transfer cash at bank. No. Why? Because in the realization account, we transfer only those assets which we are going to sell in the market and from which we are going to realize some money. The cash at bank is already in the liquid form. So we are going to transfer these 4 assets. Clear? So let's transfer them. What will be the journal entry? Realization to assets So I can say to freehold property, that is 8 lakhs, right? To investments is 2 lakh. Then to debtors are 1 lakh, and to stock 1,50,000. Right? So we have transferred all the assets to realization account. We have collected the assets and put the assets in one carton. That carton is our realization account. Now, talking of liabilities, are we going to transfer this capital accounts? No. Sundry creditors, yes. Outsiders liability we are going to transfer to realization account. Profit and loss account, is it an outsider liability? We have to pay this profit to outside. No, it is our own profit. So in the realization account, we have to take only those liabilities which are payable to the outsiders. In this case, it is only sundry creditors of 2 lakh rupees. So I will say by sundry creditors of 2 lakh. Clear? This much is clear. We have completed step 1 of realization account, in which we say transfer all the assets and liabilities to realization account. Now let's see. Now what is the next step? Can you tell me? What is the next step? In the last lecture, I told you about the 4 steps of realization. Step 1 is transfer all assets and liabilities to realization account. What is the step 2? Step 2 is realize money from the sale of assets. Now let's sell assets. What is given regarding that? Right? See, it is given that X took over the investments at a value of 1,90,000. So an asset is taken over by a partner. What is the journal entry? We will adjust that money from the partner's capital accounts, and the journal entry will be partner's capital account debit to realization account. So here I will say by X capital account, right, investments for how much? 1,90,000. Clear? Next, he says cash realized was freehold property 9 lakhs. From freehold property we realized a cash of 9 lakh, from debtors 90,000 and stock 1,40,000. So I can say by bank, right, from property we realized 9 lakh, right, from debtors we realized 90,000, and from stock we realized 1,40,000. So what is the total amount that we realized? It is 11,30,000. Clear? Any other asset left? No, we have treated all the assets. Now regarding the liabilities, they say that creditors were paid at a discount of 5%, right? So what is the amount of creditors? If you see, the creditors is 2 lakh, 5% discount 10,000. So creditors were paid 1,90,000. So I can say to bank, in this creditors are paid 1,90,000. Then we are given that expenses of realization came to 20,000. If the question is silent, we have to assume that these expenses have been paid by the firm. So what is the journal entry for that? Realization account debit to cash or bank account. So I can say here expenses, how much? 20,000. So what is the total? 2 lakh 10,000. Now which side is more, debit side or the credit side? In this case, credit side is more than the debit side. right? So that means we have to gain transfer to X capital, Y's capital and Z's capital. So the total gain is 60,000. This will be equally distributed. Profit sharing ratio is equal. So 20,000 each will be distributed. This total is 15,20,000. Clear this much? Realization account is clear. Friends, just remember those 4 steps. Clear? First is transfer all the assets and liabilities to realization account. Second is sale of assets. Third is from the money realized by sale of assets, settle the liabilities. Fourth is close the realization account. On closure, there will be either gain or loss. Credit side is more than debit side, it is a gain. If debit side is more than credit side, it is a loss. Loss will be transferred to partners' capital accounts in their profit sharing ratio. Very simple logic, right? That's why I told you that before this video you must go through the previous lectures. Before this lecture, this question you will be able to understand that why we are doing like this. If you have understood the logic, if you have understood the previous lectures clearly, then this is a very easy question for you. Nothing in this chapter. Even if any other question is there, you will find it very easy because the whole concept revolves around this. Clear? The whole concept revolves around this. Clear, friends? Now, next we have to prepare partners' capital accounts. So let's prepare partners' capital accounts. Prepare the formats. Right? In examination, do prepare proper formats, okay? Here we have particulars X, Y, Z, particulars X, Y and Z. So what is the opening balance of capitals? If you see the question, balance sheet, the opening balances are given at 5 lakh, 4 lakh and 3 lakh, right? So I can say by balance brought down, this is 5 lakh, 4 lakh and 3 lakh. Now first see the realization account. Is there any treatment regarding to the partners' capitals? Yes. 2 treatments are there. One is the investment is taken over by partner. For that, the partner's capital account is debited. So I will say to realization account, this is 1,90,000. Clear? Isn't it? These investments are taken over by partner. Then the second thing we have is the gain on realization, which will be transferred to the partner's capital accounts. So by realization, in this case I will say gain, this is 20,000 and 20,000. Clear? Right? Now anything else in the realization account? No. Then we discussed that any reserves are appearing in the balance sheet, any reserves and accumulated profits or losses appearing in the balance sheet, they should be transferred to the partners' capital accounts in their profit sharing ratio. In this you can see the profit and loss account, that is the accumulated profit appearing in the liability side of the balance sheet. 1,50,000, this will be equally distributed among partners. So by profit and loss account, this will be 50,000, 50,000 and 50,000. Clear, friends? Anything else? No. This is all about partners' capital accounts. Now what will be the balance? As we can see, credit side is more than debit side. So what should I write here to balance carry down? We discussed in the last lecture that in this case we can't write balance carried down because we are closing down business. We are not carrying forward the capitals to be shown in the balance sheet. We are closing down the balance sheet. How can we write capitals then? We will write to bank account, which will reflect the amount which is being paid to the partners. Right? This amounts come to 3,80,000. Right? 4,70,000 and 3,70,000. So this total is 5,70,000. Right? 470 and 370. Clear, friends? Capital accounts is clear. I hope this much is clear to you. Right? So we have prepared the partners' capital accounts, and we have discussed that in partners' capital account, the balance is to be transferred to bank account, which reflects the payment made to the partners or payment brought in by partners. In this case, if you see, this is payment to partner. Clear? This is credit balance. This is what we call credit balance. Credit side is more than the debit side. It shows the credit balance, that is the payment made to partner. Now what we are going to prepare last is the bank account. Clear? So lastly we are going to prepare bank account. Can you tell me the opening balance of cash at bank? This is 3 lakhs. Where I will write, I will say to balance brought down 3 lakhs. Now see the realization account. Can you see something related to bank? Yes. We have the assets sold, right? 11,30,000. So I can say by realization, how much? 11,30,000. Clear? Sorry. I have to. This will be bank to assets. Sorry. To realization. 11,30,000. Sorry, friends. Because the journal entry is bank to realization. Oh, sorry. Yes, bank to realization. Clear? Now, this is, we have assets. Now, what about liabilities? Yes, we have this also, bank 2,10,000 regarding the liabilities. So, I have regarding the liabilities also, that is 2,10,000. What else? Anything else in the realization? No. Check for in the partners' capital accounts. Yes, the balance that is being paid to partners' capital 3,80,000, 470 and 370. So I will say by X capital 3,80,000, right? By Y's capital 4,70,000 and by Z's capital 3,70,000. And if you cross check this, is there any balance in the bank? No, there will be no balance. Your account will tally. This comes to 14,30,000. That means after settling all the accounts of the partners' capitals, your bank will tally. After doing all the transactions relating to realization, relating to partners' capital, your bank account will tally. There will be no balance carried down. Right? In dissolution, remember this, there will be never a balance carried down. Neither in the partner's capital account, neither in the bank account. Because if we will say balance carried down, where we are going to take this balance? We are closing our balance sheet. Where we are going to take that balance? Right? So either the accounts will match, or in case of partner's capital, it will be the payment that is to be made to partner. Is this clear, friends? So I have told you in this question he has asked about the journal entries also, that you can pass out on your own, right? We have discussed all in detail. So friends, I'm telling you again, go through the first few lectures first. If you have understood the basics of dissolution, if you have understood about realization, what is realization, what is partner's loan, what is partner's capital, what is bank cash, what are the items to be included, why they are included, how to treat workman compensation, how to treat expenses. If you know all about this, then doing practical questions will be very, very easy for you. You just need to understand the logic, you need to understand the basics. Clear? Clear, friends? So if you have any queries, I have done one question with you. Practice more questions on your own. If you find query in any question, just send me the image of the question. Right? Email me at ksjteaching@gmail.com. Just send me the image of the question. I will give you the solution. It will be better if you give me that specific point where you are finding the question difficult, right? So that I can focus on that specific point. Clear, friends? So in the next class, what we are going to do is, we'll be just covering whole of this topic in the next two lectures, right? We'll complete dissolution. In the next lecture, what we are going to do is a small topic related to partners, loan and capital. Partners loan and partners capital. How we are going to set off these against each other. This is a very small topic we will cover in the next lecture. Clear? So that's all for this lecture, friends. Thank you so much.